Welcome back to the Loveland Report and the Lone Ranger Radio Show. My name is Bruce Woodburn. I'm the Lone Ranger. Cleve had to go out on an appointment, and I will be handling the show for the rest of this half hour or so. If you have any questions for me about financing, about what type of loans may be available to you, feel free to give me a call. I'm here right now at the studios at 407-250-9144. You can call me or text me there. If you can't get through to that line, then feel free to give me a text. If you'd like to apply online, I have the easiest doggone website for an online application that I've ever seen. Go to WeBringYouHome.com. It's in English and in Spanish. It's easy. It's super easy. So I want to get right down to some business here, because you guys are smart listeners out there. Okay. I know you are. And, I've got to meet and get to know so many of you out there. And believe me, I take that relationship very personally, and I am grateful to have you as loyal listeners on my show with Cleve and my own show on Sunday mornings at 11 o'clock. Please tune in for my show at 11 o'clock called the Lone Ranger Radio Show. But let's just talk about this. I want to go back kind of into the past. So I want to go back in and talk about what things we're doing 40 years ago, because I think that we're starting to see a trend and a pattern. You know, everything in the universe tends to be in cycles, right? Whether you like it or not, it tends to be in cycles. So the bad things come back and the good things come back. But people forget, and history repeats itself. So I was just pulling up an article that I was looking at, actually doing some research on history. With mortgage rates rising, into the 5s right now, and in investor loans into the 6s, as inflation has hit a 40-year high. Okay. So inflation is something we all feel. So when the government is pitching higher taxes, and the government saying, we're not going to raise taxes, or we're not going to do this, or we're only going to tax the rich. Well, I want to put this in perspective for you. If you are fairly wealthy, let's just say above the average income, you make, let's just say, over $150,000, $200,000 a year. Now, the price of gas and groceries don't affect you as much. But how about the family that's got 3 kids living on $35,000, $40,000? How do you think it affects them? They have to get to work. How do you think that when their gas prices double, their groceries double, their homeowner's insurance is doubling and sometimes tripling? Now, how do you think that affects them? So when we are out voting for who's in office, think about who has the best interest in heart, because right now I see the liberal government pitches that they're there to help the low income people, but they actually screw them big time in a royal way. The wealthy people that they claim are going to tax higher, they're not impacted by a gallon of gas, by the groceries. It doesn't make any difference to them whatsoever. So think carefully the next time you go to the voting booth about who you're going to vote for that's going to look out for those things and not drive the economy into the dirt like it is. Now, when I say driving the economy into the dirt, it's causing things to rise and inflation that we haven't seen in a long time. But let's just go back and look at a half a century ago. America endured economic earthquake. So back in the 70s, so we had, the import dependent United States. Okay. This is when, everything's got to be global, right? Began rationing gas in December. And by the end of the year, long lines, no gas signs were commonly sights at filling stations from coast to coast. Oil prices jumped by 350%, according to the National Museum of American History. And the ripple effect of the energy costs spread to everyone from corner to corner. Mass layoffs, rising prices caused head-on collisions between soaring inflation and economic stagnation. So this is all in the 70s. According to the Federal Reserve, oil prices doubled between 79 and 80. Okay. Now, it's interesting. let's talk about 1970. The rate for a 30-year fixed in 1970 was averaging 7.33%. Now, what's the loan arranger been telling you rates are going to? 7.5%. Call that 7.33%. That's what it's going to go to. I'm just telling you this, not because I'm not telling you as a fear factor. Quite frankly, I'm buying property. I'm looking at a couple of properties right now, and my interest rates are up along with yours. They're no different. So I look at that at 7.33%. Now, although rates stayed at below 9% through the middle of that decade, they breached double digits in the fall of 1978 and remained there till 1986. From 78 to 86, they were in double digits. Now we turn to the 80s. In March of this year, of 1980s, the world learned that inflation had risen to 7.9%. The month before, which was a 40-year high. Prices hadn't jumped so highly since 1982. Now, while today's inflation is certainly causing anxiety and is simply not comparable to the extraordinary events of 40 years ago, the 1980s started with a recession, okay, triggered by monetary policy changes within the federal government. Those things are a little bit crazy, and I don't want to talk too much about that. But in the wake of the Iran crisis, mortgage rates soared to 16.35% in April of 1980. Before plunging briefly, when I say plunging briefly, to a low of 12.18% in July of 1980. Then the devastating recession in 1981-1982 gripped the country. Mortgage rates peaked on October 16th of 1981 at an impossibly high 18.53%, 4 times what today's rate is. So if you think that you are going to hold off on purchasing a home because rates are high, they're going to get higher. I'm just telling you, they're going to get higher. But the good news is so is the price of your home. So when I look back and I see what are prices, what is historically our prices going to do? Well, I can tell you that if you do your research, you're going to find that all the data shows that between 2025 and 2026 your average house that's worth $300 to $350 right now will be $600 to $700,000. How do you like that? So you might pay a higher interest rate. Big deal. Who cares? Who cares? That's like saying, well, my closing costs are going to be $8,000. Yeah, that's not good. I don't like $8,000. But you're going to make $60,000 on the house. Oh, well, I still don't like the $8,000. But wait a minute. You're going to make $60,000. So do you not do it? You can make $52,000 on that house in a 12-month, 15-month, 18-month period of time. Who cares about what it costs? It's what you gain. So stop stepping over a dollar to pick up a penny. Don't do that. Get in the market now. You're going to experience some massive increases in prices. Don't be one of those people that fall into this BS that houses are going to drop in price. They're not going to drop in price. How can you drop a price of a house when the cost to build it is more? And there's people lined up to buy them. It's not going to happen. Period. It's not going to happen. You're going to continue to see the rise. So rates are going to rise. So get in now. If you haven't refinanced yet, pick up the doggone phone. You didn't call me when they were in the 2s. You forgot to call me when they were in the 3s. You were too busy to call me when they were in the 4s. Are you going to wait till they're the 6s? Because right now I'm still doing some cash out refis to consolidate debt. Now, if you call me and say, hey, I got a 3.25% interest rate and I want to get rid of PMI, I'm going to tell you don't do it. It's not going to be worth it. No, it's not going to be worth it. But if you're telling me I got a 3.5% interest rate, but I got $25,000, $30,000, $40,000, $50,000 in consumer debt that's running me $1,500 a month, maybe you've got enough equity for me to wipe that debt out, pay it off, and get you on the right plan. I've got a client right now. Matter of fact, let me give out my number because I've been ranting here. Apply online at WeBringYouHome.com or call me at 407-250-9144. That's 407-250-9144. Got a client right now. Called me up when interest rates were in the 3s. Now it's calling me up. Interest rates are in the 4s. And I recently locked them in on a 15-year rate in the high 3s. Not available for you today, I'm sorry, but 15-year rate in the high 3s, cash out. Now, I'm paying off $1,489 worth of monthly debt, and his mortgage payment's going up by $40 a month. Now, which is better? Paying the $49 a month plus another $1,800 in consumer debt? No. Refinancing that, wiping out all the debt, and on a 15-year mortgage, I showed him how he has no debt if he maintains that habit, no debt, and a 15-year mortgage, $50 more than he's paying right now between all of his debts, but he's debt-free in 15 years with no mortgage, with no debts. Now, wouldn't that be a nice way to go into retirement debt-free? Now, he's got to do the 15-year loan. Those payments are a little higher than a 30-year loan, but the rates are incredible. So if that interests you, pick up the phone and call me, 407-250-9144 or WeBringYouHome.com. That's WeBringYouHome.com. If you are a teacher, law enforcement, some type of first responder, healthcare worker, I have the best program for you. Call me. It's reduced closing costs, reduced interest rate, and if you're buying a home and you team up with one of my qualified real estate agents, they give you a rebate. You can get up to $4,000 or $5,000 in discounts off closing costs by using my system. Why would you go anywhere else? Why would you go anywhere else? It makes no sense. The loan arranger, Bruce Woodburn, is here to take care of you. 407-250-9144. Now, let's segue into another topic. This is going to be frightening. So if you are a parent or grandparent and you have adult children or adult grandchildren that are presently renting, nationally we've been told, well, we know that last year rents went up by 20%. They had been predicted to go up by another 20%. But that is not the case. There are places within your neighborhood, your area, that rents are going up dramatically. So here's what you got right now. I'm seeing 40% to 57% increases in rents. So your landlord will raise your rent, but they want you to get out so they can go back and raise the rent higher for the new buyer. So essentially, you are looking at forced eviction if you can't afford that payment. Because here's a guy that was paying $1,747, it's going to $2,450. It's a 40% increase. And that's going to probably continue to go at that pace for the next 4 to 5 years. So why would you want? Renting is an adjustable rate mortgage. So how can you help if you have adult children or grandchildren? Give them a gift of down payment so I can get them into a home right now. You got to remember that your $275 home last year at this time is now $369. 2 years ago, it was $252. I was telling you to buy then when rates were in the 3s. I'm telling you to buy now while rates are in the 4s and 5s. I'm going to tell you to buy when they're in the 7s and 8s. But they're going to continue to go up in price. Think about that. If you would have bought that home just 24 months ago for $272, and now it's worth $370, I mean, you made $100,000 in 2 years on a house that you had to live in anyway? It makes no sense. So look at your grandchildren, look at your children, and help them become homeowners. It's the right thing to do. Listen, if you die and you leave them an inheritance, they're going to go buy a Boston Whaler, they're going to buy a big screen TV, and they're going to spend your money on frivolous things. Why not protect it and make sure that your inheritance goes to the right place. I'll be back in 5 minutes with more of the Loveland Report and the Lone Ranger Radio Show with Bruce Woodburn, CrossCountry Mortgage, 407-250-9144, or Cleve Loveland at 407-352-8118. Stay tuned.